Good morning, everybody. This is your Dow Jones setups for today. So quite a solid break to the downside yesterday, and a bit of an inside bar forming. Now, just a reminder, I'm not around next week, so this is the last video for a while. So I'll try to give you some weekly levels here. But the S&P and the DAX offer a little bit of a different setup to this and more structured. And what we're going to try do here is just see what's happening on the Dow. But just want to get the levels in and then we can talk it through. So first thing that you can see that is really clear is we are trying very hard to form a flag. It's just a messy flag. Try and look at it on the lower time frames, but that's kind of what we're trying to do there. Look at my oscillators group to the downside here on the 8 hour, coming into a zone of support at 45.66 and 44.34. If you look left, you can see there's the fractals there, there's the fractals to the downside. Not really that strong. There's nothing further. The next one below would be the swing high. Sorry, and there's another little one here. It's a swing low. So this is the zone that we are looking at the moment. So 45.66 to 44, let's just say 44.50. Below that is 42.33 and 41.17 or 4100. So for me at the moment, we were ranging and we broke the range to the downside based on some noise yesterday. But look at what happened. Look at this massive pin bar off structure. So technically speaking, a break above that, preferably a green bar above that, would have triggered a setup to the upside. Now there is a bit of overhead resistance here, and that is my line in the sand. We'll get to that now. So now you see this flag attempt closer, and look at the diversions here as well. So textbook flag in amongst the moving averages at the moment. So we are consolidating, which is exactly what we're doing, or ranging, and we have non-farm payrolls coming out later today. So the market is waiting for a catalyst to drive it. Now, looking at the hour, you can see a big move down. Buyers scaled in. I suppose it was a bit of profit taking and probably some buyers coming in here at the close and holding. Not something I would advise for us retail traders. These people have obviously got deep pockets, and for me the logic is still the same. 4100 is your line in the sand. You want to see a break above it, and you want to see price come back and test either the diagonal or any of these tails here, which will form horizontal support. And you can see how we try to range in here. So to come up above this 4100 and then find support there, that is a perfect opportunity for longs. And then I'd trade the flag, and your first target is going to be the top of the flag, which is up here around 41.573. Sometimes what I do is just take the underside of it. There's multiple options. So you've got 41.516, and then you've got all the way down to 41.440. So that zone there would be your first area that you take profit. When you drill down to 15 minutes for yesterday, hindsight, you see the squeeze in amongst the moving averages here started getting going, but again, that was not an opportunity to trade long. You wanted price to move past, come back, and then find support on one of the highs of yesterday. Before that happened, that didn't. You got a big engulfing bar based on noise, and I think that gap was open as well. Yeah, so the daily gap was also open, so that was what was being targeted, and then continue down to the next level. So for me, don't want to be jumping in short, because this is the kind of structure you're getting on short. It's not clear cut. It's more of an ambush style that's happening, and just getting the people, any loose hand that's long, is just forcing them out by moving a market down quickly and getting people to panic. So at the moment, you've got non-farm payrolls. You're probably going to just range like this, or even continue drifting lower in the flag until we find the next zone of support, or you're going to see us drifting up and somebody knows what's happening, and we're going to be targeting this 4100. But for me, 4100 is what you need to wait for any move to the upside. You've got a sizable trade or days of trading to get up, so there'll be a good 400 points on offer. Probability of us moving down, I mean, it's always there, but there is two strong zones of support which price is going to hold up. So the bulls will come in off these two zones. Okay, so could say 4500 area and 4200 area are the two zones. So the bulls will definitely come in off those two zones to try and prop price up. Now, the difference here to the S&P is that the moving averages are really close to price. So any break higher and retest, you're going to have a lot of moving average support as well. So it's going to be a little bit more structured than the S&P. The S&P's moving averages are very far apart and quite steep to the downside. So there's going to be quite a bit of work there to break if it does start moving up. Anyway, that's kind of my setup. Just pay very close attention to your stops. Don't try and second guess it. Wait for the structure, wait for the breaks, and wait for the retests. Once the moving averages are flipped over and they're pointing up, then you just trade the pullback. So you buy the dip and you continue buying the dip and selling at the next level of resistance. Hope it helps, and we'll catch up with you tomorrow morning. Sorry, we won't. We'll catch up with you in 2 weeks' time. Cheers for now.